So here we have JP Morgan calls for Bitcoin price of $146,000 plus. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Wednesday, January 6th of 2021, covering the gold and silver markets, silver and gold markets. We're going to cover silver first, maybe talk a little bit about gold, and talk about some of the wild action that happened in the price just moments ago, as well as other developments in the precious metals world and associated global events. First, before we get started, I would like to mention that today's video is sponsored by Silver Sands Resources. I know many of you caught Keith Anderson, who is running Silver Sands. I was on the show about a week or two ago and was talking about what they are doing down in Argentina with their high-grade Virginia silver project. I am quite fortunate to be an investor in that one, which is not legal financial advice, but it's a project that I heard about, recommended from a friend who, let's just say, she knows what she's doing. And in either case, I think it's worth further research. Try not to tell people what they should invest in. I don't know if that's the best way to do. And this is also not legal financial advice, but take a look, or actually you don't have to do anything, because in addition to how the link is in the description field below, I'll link to that interview at the end of today's call. So, and since they're bringing you this episode, and since that one was a fun one, just stick around and watch it, which is probably more fun than watching the Kitco chart right now for most silver investors. As you can see, it started out great. Here we have, let's call it 27:30-ish, early in the morning. Rallies, looks like got up almost 60 cents, and then the hammer was dropped. Now, a lot of people have been expecting that ever since Sunday night, when the price rallied 80 cents or a dollar on the open, and I was getting tons of messages, well, is the hammer about to drop? Took a couple of days, but there it is. In fact, I am going to pull up my commodity chart. Let's see what's going on in the volume. And looks like heavy volume during the drop. I guess I'll wait for my data to populate a little bit more. Not as extreme, perhaps, as some of the other charts we've pulled up. In the end, maybe part of my goal for 2021, I've manipulated fine. What's the big deal? No point in getting upset about it. Oh, interesting. Again, this does fit the pattern of what Bart Chilton described in that interview, where I asked him, once you get around those handles, where if you nudge it a little bit, then does it really drop? It appears to be what happened at the $27 mark there. Dropped quite a bit lower. And gee, I should finish this video and maybe buy like some weekly options there. Yes. And again, I don't know how many times I'll say in this video, not legal financial advice, but I think that could be a decent spot. That's at least how I approach it. In fact, I've been hearing, when I assimilate the people I talk to, the things that I hear, the things that I see, what's going on, I don't know that I have something conclusively that says we're going to see wild fireworks in the first quarter. Well, I think there's a decent possibility. So I've been waiting for a day like this, especially if this should continue. If anyone is looking to buy options, trying to time a big move, well, better to buy here than up there. Again, to be clear, trading options in the silver market, highly unsuitable for most people out there. I mentioned that's what I did professionally years ago. And really the way the channel got started was during the big moves in 2011. I did have large option positions on then, which went better on the way up than the way down. Again, I think just having physical bullion for people who are seeing this and like the idea of silver and gold is the most conservative. Then you have mining stocks. Obviously, once you get into the derivatives, a much higher level of risk. I hope in due time it will be a good speculation. I wonder if I got it right back in 2011 and it was only spoofing that clobbered my trade. I don't know, maybe we'll get, been meaning to check in on these lawsuits again, the class action stuff. And hopefully we'll be talking with my lawyer soon. So anyway, I don't know about that, but I still try and do some option trading around this, which I guess is more trial than error than anything at this point. But I like to think there will be an ultimate happy outcome. And hopefully a lot of the people, I'm assuming if you're watching this, you probably had some spoofing losses in the past decade, and I will continue to dig into that. Hopefully we can get some reimbursement there. But in either case, sticking to what we can control. Here you see the price down a bit, but I guess the two thoughts that I have, and again, these are just thoughts of things I might do, so consult your own guidance or do your own thinking. But I could see, especially we've seen that V pattern similar to here. So I'm thinking of perhaps making a small bet. There are weekly options that expire every Friday. So I don't know. I mean, it could go $1 lower from here, but if I finish this video soon and put this on, and you have something like that, especially, I don't know, if it goes a bit higher, rallies back, maybe somewhere up there by the end of the week. Not very scientific, but I like to take some stabs at it like that and sometimes see what you hit. And if nothing else, if you are interested in option trading, I would say the best piece of advice I could give you is just buy one lots. But anytime you think anything, just do it, because there's so much to be gained by when you actually ride the bike rather than hearing people talk about what it's like, or it's like that old phrase I love so much, experience is worth 1,000 cookbooks. So, just having positions in these things, I remember from my trading days, it always takes on a different meaning in the mind. It has more significance when there's something on it, and it just helps to accelerate really your growth and learning curve, not just in option trading, but anything. So if it's within your means to buy one lots and just start studying how these things go, noticing, all right, I did this. Did it work out? What can I learn from there? That's what I continue to do. That's what I've been doing for 15 years. I think it's a good strategy. And I'm excited now we got the show a little more streamlined this year and finally having a little time to do some other things. Hope to get back into more option trading this year. And I know I promised before the spreadsheet and some option calls, and there is a lot of stuff we have planned. In fact, I will make a note on that as we're making our 2021 game plan, which includes some fun stuff here. Great reason to hit the subscribe button and the notification bell so you can stay posted, tuned, and we'll see how this one shakes out. Quick look at the silver stocks, as you might expect. Looks like a lot of them were starting the day down already. I guess the price was coming down. Let's see, all right. So it was already on the way down by the time the market opened. Talked about First Majestic going to 14s yesterday, down 3%. Silver Elephant down 5.2%. And I think this is a great example of conditional probability, because the way I was trained to look at this and would recommend if someone asked is that, all right, so silver went from 27, just lost $1.20 in the last couple of hours. Now, if you think that is just regular trading or volatility or whatever you want to call it, and that you still believe that sometime in the future the price is going to be way out 30, 40, whatever price figure you have, then that's how I try and handle these things. Where now, if something has changed, my longer medium term fundamental assumptions of where I think silver has to go has changed, then maybe the stocks are worth less. But if it's, in my opinion, just people algo trading and things that don't have any impact on the longer term price movement, then to me that represents a buying opportunity. Put in other words, let's say silver was going to be $50 by June. I'm not saying it is, but let's just say that we knew that was going to happen. I don't know. I mean, it wouldn't, it could be up, down today. To me, this doesn't have any relevance on what's going to happen in the longer term, which is why at least my strategy has been to continue making sure I'm looking at everything properly, talk to anyone I can, and feel confident in my longer term view, which then allows me to have a different perspective trading these things here. And again, if you stay within your bankroll, you don't go too big. Not only can you learn a lot, you can have a lot of fun, and you can discover some great things. So, some philosophical ideas on trading today, and hopefully that's helpful. Because if you are of the mindset that this doesn't change the long-term future, well, as you can see, it's like a Black Friday sale because everything is down quite a bit. And now on to our next story. I got this one this morning. I'm about to, after I finish up here, I'm going to record my interview with Dave Kranzler. I knew this one would get him fired up. So here we have JP Morgan calls for Bitcoin price of $146,000 plus as former Trump official gets in on the frenzy, starts Bitcoin fund. I couldn't help it on this one. I mean, there's just a few gems here. One Bitcoin could eventually be worth 146,000 if the cryptocurrency's volatility can converge with that of gold and investors embrace it as an asset class, according to JP Morgan. Always fun when JP Morgan is getting inside the minds of gold and silver investors. I guess they had a lot to think about while writing out that $920 million check for manipulating the market, but at least it won't happen overnight, or at least not this year. But a crowding out of gold as an alternative currency implies big upside for Bitcoin over the long term. And a convergence in volatilities between Bitcoin and gold is unlikely to happen quickly and is a multi-year process. Again, no comment on silver here, interestingly enough, from JP Morgan. Although here you have, now I know this is unconnected, but I couldn't help resist. Here, Anthony Scaramucci famously served for 10 days as the White House Director of Communications. And that was what cut former Trump official gets in on frenzy. I know he's not this guy, but just when you hear Trump officials getting in on the Bitcoin frenzy after Christopher Giancarlo mentioned in a speech that one of the untold stories of the past few years is that the CFTC, the Treasury, the SEC, and Gary Cohn, I mean, now keep in mind Treasury, that's also Goldman Sachs, Steve Mnuchin, in addition to Gary Cohn, Goldman Sachs, believed that the launch of Bitcoin futures would have the impact of popping the Bitcoin bubble, and it worked. Now, we've talked about this before on the show. I don't know if Goldman Sachs was given advance warning before the Bitcoin bubble was popped. Here, Giancarlo elaborates saying that in December of 2017 was the first major bubble following the 2008 financial crisis. I guess he didn't see Trump's campaign speech where he mentioned that the stock market was a big, fat, ugly bubble. But they decided, we saw a bubble building, thought the best way to address it was to allow the market to interact with it. You didn't allow the market to interact with it. You create a fraudulent unbacked futures contract that allowed you to distort it. I mean, even at least these days, the government they don't lie as much. They just try and send these whoppers out here and hope you just nod along. But so basically, the government's now deciding Bitcoin's too high. And okay, so what is the CFTC saying now when Bitcoin is 34,000? Is that another bubble that they feel it is their responsibility to pop? Wow, look at Ethereum, 56% in the last 7 days alone. Again, yeah, these are wild numbers. I just have an issue with the government deciding arbitrarily what is or isn't a bubble, playing God in the market. So I don't know, when former Trump officials are getting in on the frenzy, just seems a little contradictory with what other former Trump officials have been doing. Anyway, as you go down here, Rich Dad, Poor Dad author Robert Kiyosaki, who I interviewed a couple of years ago, tried to get him back on the show. He declined. but he is a big Bitcoin fan, predicting a rise will rise nearly 100% per year over the next 3 years to $75,000. I guess this article is a couple days old, as we're now at 35,000. Max Kaiser predicting Bitcoin to 400,000. Though here you have legendary investor Jim Rogers says Bitcoin is not an investment, it's gambling, and the government will now never allow it to be used as money because cryptocurrencies are beyond the government's control. So obviously, many sides to this story, many different opinions, although, you know, I don't have a lot of cryptos. I have one crypto. I bought a bunch of them back when they were real cheap in 2017, and it's like currently a 25 bagger. So hoping that will be some good funds. Maybe I'll pile it into silver miner call options at some point. But anyway, JP Morgan calling for a Bitcoin price of 146,000. So you take that as it will. Bitcoin's going to go up that much for conceivably the same reasons that one might invest in silver or gold. And we'll see how it plays out. Anyway, a few more before we wrap up tonight. Here is the Comex Year in Review, an article by Craig Hemke for Sprott Money. And as he says here, well, I guess it was Gata that wrote the headline that he thinks it's on borrowed time. And I'm going to read an excerpt from the very end, which captures the gist of the article. So he's talking about everything that happened in the Comex and the LBMA in 2020. Then says, so put it all together and what do you have? An exchange and pricing scheme that is on the brink. CME has attempted to plug every hole in their Comex exchange by changing rules and amending contracts, and it has worked for now. But if prices continue higher in 2021 and physical demand flows in tandem, heavily stressed wholesale buyers will continue to utilize Comex as one of the few remaining readily available stores of physical metal on the planet. This was the risk the CME and LBMA took when they openly converted Comex into a physical delivery vehicle back in March. Doing so, they bought themselves some time. They're very likely sealed the fate of their pricing monopoly. Comex futures market was never intended to be used as a physical delivery platform, and for 45 years it wasn't. But in the 46th year of 2020, that all changed, and now the CME group can only hope they have enough fingers to fill every hole in their dam in 2021. So there you go. Obviously, some of you have seen Craig Hemke on the show before. You know I'm a fan of his research, and perhaps one thing that sticks out, you know where I stand. I think there's going to be someday, whenever that is, that this implodes. And of all the people I spoke with in the Big Silver Short book about this situation that I put out last year, I guess Craig was one of the ones who was always more hesitant. Is like, yeah, well, it is headed there, but not yet. And so just looking at the way people who are close to this respond, it's interesting the way he's phrasing it here, which certainly seems a lot different from what he's said in previous years, and rightly so. Does that mean 2021 will be the year? We'll find out. But in terms of, where did he mention here? But if prices continue higher in 2021 and physical demand flows in tandem, I mean, gee, there's every reason that you would expect that. Here's the debt clock, which is interesting. You see 27.7 today. I remember when they announced that $900 billion package, which I think was just 2 weeks ago. It was, because I did the math. I was saying, well, it's 27.5. You add on 900, and there you go. I don't know if some of that money has started going out yet, but anyway, it's already up $250 billion in the last 2 weeks. That doesn't seem to be slowing down anytime soon. And here is the Fed's balance sheet. So up to 7.36 trillion. Let's take a look at the last 3 months. That should be a hoot. Yeah, so it's hovering around 7. Now it's getting back up there again. Not again. I mean, it's always been there. And fortunately, you know, since I have this up, I'll just show it to you. Here's a Bitcoin option trading platform where, let's see, am I logged in here? Can I get these? You should see how wide these spreads are. In fact, you don't even have to know anything about the direction of where Bitcoin's going to go, but gee, I want to start making markets on these things. There you go. Well, a little tighter than before, still $1,000 widespread, and something to keep an eye on. But anyway, that is today's gold and silver news. We'll do one more check on the price. See, it's rebounding already. That's the dedication rather than making the trade. Got this episode prepared first. So, but yeah, you see there, sure enough, there's that V-shaped rebound. And I guess if I had stopped and bought some weeklies, maybe that would have worked out well. We'll see what happens for the rest of the day. Although fortunately, if you don't want to have to spend your time staring at a chart all day or guessing that, well, that's what silver is for. And silver mining shares in the right context. And to find out more about one of the companies that I like and that helps bring this show to you guys every night, here is a video with Keith Anderson of Silver Sands Resources.